Welcome everyone. So today in this video I will be explaining what are the different kinds of mutual funds are available for us to investments. So the here you can see that the tax saving mutual funds, large cap mutual funds, mid cap mutual funds, small cap mutual funds. Generally, every employees will be investing some of the funds under the section 80C for tax deductions. So all those category kind of mutual funds are available in this category. Large cap, mid cap, small cap. All the stock market companies are divided into these three segments. Large cap means most of the major companies which are ruling the economy of India. Mid cap means medium capital companies which whose capital investments are less, and small caps are startup companies. All those things which are emerging companies. So let's go into one of the mutual funds. So I'm selecting the large cap mutual funds. So here you can see the list of different kinds of large cap mutual funds are available in this broker. I'm using Grow brokerage, so I'm showing you demonstration in that brokerage. So let's see here. Nippon large cap funds are there. ICC large cap funds are there. SBI and different else large cap funds are there. You can see 1 year annualized growth, 3 year annualized growth, 5 year annualized growth. All are available for the different companies. So let's go to one of the companies which are listed. So I'm selecting ICC Prudential Blue Chip Fund Growth. So see here, it's already default selected as 3 years. 3 years means you can see the price of mutual fund, how it's growing for the past last 3 years, for the past 3 years. And you can also see for past 1 year how much is growth. Say here you can see for past 1 year this mutual fund has shown 27% increase. When we go for 3 years, it has shown 21.19%. That is annualized interest. Annualized means for averagely it's showing per annum it's showing a growth of 21%, which is far better than bank interest rates. So when come to a short time period, 6 months, so it has shown returns of 18% for 6 months, and as well as we can also check for 1 month, 5 years, and from the start of this mutual funds also. So for this mutual fund from the beginning, so when it has started, 2013 it has started, and from that time it has shown an average of 16% per annum growth rate for this mutual fund. So let's see what all things more we need to consider while selecting the mutual funds. So let's go here. You can holdings will be there. So you can see what all companies they are investing. If you are investing in these mutual funds, in what all companies the fund manager will be utilizing your money for growth, and with what percentage. So here you can see the major contributor this fund is using in ICICI Bank, then L&T, Reliance Industries. So it has given percentage out of 100%, 8.5% they are investing in ICICI Bank stocks. So like that you can see all the holdings of these mutual funds with their ratio also. And you can also see our entire fund is like equity funds. It has been invested for 95%, around approximately 95%. Cash 4.7%. Every funds or every kind of thing funds will be having some amount of cash, such that for if anytime if somebody is withdrawing his money from the fund, they have to transfer their money, because they can't unnecessarily they can't sell the equity and transfer the funds to the customers, right? So for that reason, for backup reason, they will be keeping cash reserves. So you can also see the equity sector allocation in this. Like in here in this mutual fund, financial sector they have given 25%, energy sector 15%, construction sector 15%, averagely for every sectors for entirely. So here one of the major part is that just expense ratio, because fund manager for handling this mutual fund, the fund manager will be there, and expense ratio 0.93%. So what does this means, expense ratio? Like here is that 0.93% of your invested amount will be taken as fees for managing your fund. Annual per annum 0.93% of your invested amount will be taken by the mutual funds. Exit load is a term. Suppose if I have invested my money in this mutual fund, and I'm withdrawing the funds within 1 year. If I'm redeeming within 1 year, 1% exit load will be charged. So that means 1% of my redemption amount. Suppose I have invested 1 lakh, and after 6 months I'm removing 1 lakh. So 1% of 1 lakh means it will be 1,000. The 1,000 rupees will be my exit fees, and expense ratio will be automatically calculated in terms of 0.93% per annum rate. So these are the main ratios which we have to see: expense ratio and exit load. It's must. Stamp duty will be default for any mutual funds. It will be constant. So you can't do anything for this. While comparing other mutual funds, you need to concentrate on expense ratio, exit load, and the most important, what all companies they are investing in, and the growth rate, how this mutual fund is growing in the past few years for your analysis. And you can also compare what are the different kind of similar mutual funds. So here, peer comparison, here you can do different kind of mutual fund comparison. Same kind of mutual fund, large cap, these all are large cap funds. Here you will be getting rating for every mutual funds: 1 year growth rate, 3 year growth rate, and fund size. Bigger the fund size means how much popular the fund is. If suppose, see, you can check this fund which is having a 620 crores fund size, means it is newly growing mutual fund. It has recently has been established, this mutual fund. These all funds are been growing from the so many years. So these are established funds, newly established funds. So that's why the rating is also 4. So if any doubts you are having from this video, comment on the video. Thank you.